Okay, Daniel.
Mm-hmm.
Right. Hi, welcome everyone. There is about 66 people watching right now. Thank you all for tuning in. I'm Dylan, the founder of Cryptominded, and today I'm moderating the Cryptominded Community ICO analysis with Crypto20. It's a pleasure to sit with Daniel, who's the CEO of Crypto20. And during this live stream, you can ask Daniel any questions you may have about the ICO that they're doing, their platform, their future plans they have, or anything else that you want to ask him. So please don't hesitate to ask the questions you may have in the live stream on YouTube or on the crowd sales channel in the Cryptominded community. And together, we'll get a better understanding about Crypto20, what they do, and hopefully make a better educated decision on participating in their token sale or not. But hopefully you're all enthusiastic about Crypto20. I am, at least. So Daniel, it's nice to have you here. Could you tell us a little bit about yourself?
Great. Yeah, it's great to be here. Thanks for the opportunity. So I'm Daniel Schwartzkopff. I'm the founder and CEO of Crypto20. I've got a background in chemical engineering and several other startups prior to this. Most notably, probably the world's first licensed sports book and casino in terms of Bitcoin sports betting, BetVIP. That was acquired by CloudBet, and Data Profit, which is an international machine learning company with around 30 data scientists.
Oh, that sounds great. So you already have some experience in the crypto scene. How long have you been involved with cryptocurrencies, blockchain technology, etc.?
I was first introduced to it in around 2011. It's a pretty funny story. So a friend of mine was in InfoSec, and he was, bringing this up to me. There was a lot of discussion around it in forums, etc. And getting involved, downloading the Bitcoin miner. This was pretty early in 2011. Bitcoin was worth around $1, and I was still at college, university, and I decided, Bitcoin's $1. I'm mining one Bitcoin a day. What am I going to do? $30 a month. It's not that much. I'd rather just play StarCraft with my graphic card. So there are obviously some regrets there that I didn't get into leave the mining going or go full scale. But I suppose hindsight's 2020, and that's why getting involved with Crypto20 now.
Yeah, hindsight is definitely always an annoying thing. You can never know it in advance, but when you know afterwards, it's always unfortunate.
For sure.
So back to the current, you have started Crypto20 about a few months ago. Could you tell us a little bit about why did you start Crypto20 and what do you do with Crypto20?
So Crypto20 is a tokenized cryptocurrency index fund. So essentially, the reason we started it was because it's pretty difficult to get into cryptocurrency as an individual, especially to have kind of a rebalanced portfolio in terms of, actually having to look at your, holdings every week and determine, okay, what am I going to allocate where? There's thousands of coins to choose from at the moment, and it's really difficult to make those kind of informed decisions right now. The market data is very thin, and actively managed funds have lost out to index funds since their inception in 1976. So, all indications pointed towards, there's this new crypto space. It's very volatile. People would like to get into it, but they just don't know how. That kind of initial complexity of having to do the research of, which coins to invest is kind of choice paralysis, and it prevents a lot of people from just getting started. But with Crypto20, we aim to, kind of alleviate that problem and offer a solution to people to get into cryptocurrencies without having to think about it. they can hold a diverse, rebalanced cryptocurrency portfolio by, just owning a single token. They don't have to think about it or do anything, just, buy and forget.
Right, so if I had to summarize that in one sentence, it essentially you allow investors that do not have the time to research to invest in a wide range of cryptocurrency funds or assets through your platform.
Yeah, so that's what we, they don't need to do anything. They just need to hold the C20 token. They don't need to put cash into the platform or anything like that. And the token will be tradable on exchange, or you can liquidate it directly via the smart contract because our tokens are directly linked to the underlying assets.
Right, makes sense, makes sense. Okay, so we'll get to the community questions. We already have a list of questions that have been asked on the crowd sales channel. But if you want any clarification on any of the answers that Daniel gave, or you have any other questions, please feel free to ask them in the live chat on YouTube or in the crowd sales channel. I already saw some questions come in. I definitely see them, so I will attend to them. And yeah, let's get started. So the first question actually boils down precisely to where you started, which is, what is the predominant strategy that you're going to base this cryptocurrency fund on? Because basically, I, as a user or holder of Crypto20, the C20 token, I essentially entrust you guys to make the right decision, or anyone that holds the C20 token entrust you guys to make the right decision in picking the right assets. So how do you make these decisions? Can you tell anything about that?
Yeah, so that's something pretty important, actually. But in terms of what we do at Crypto20 is that humans make no decisions. It's all automated and it's rules-based, and the rules that the fund operates on are predetermined. So, there'll never be any kind of unexpected trades. We can't do any sort of rogue trading, invest in friends' coins, or anything like that. It's all automated by, a sort of back-end procedure and system that we've got. We hook up to 8 of these different exchanges via API at the moment, and we can perform all those trades automatically based on a strict rule set. So if you don't know what an index fund is, maybe I should give a little bit of a background to some of the viewers. So an index fund holds, the top X stocks, cryptocurrencies by market cap, and they have various different hyperparameters. Those parameters being, how often do you rebalance the fund, how many coins or stocks are in the fund, and if there's a component cap. So our selected hyperparameters, we use the data science approach. We looked back at, the past 2 years of data, and we try to determine the optimal hyperparameters that would generalize well into the future. So we chose a 10% component cap, weekly rebalancing, and 20 coins in the index. So if you've ever heard of Vanguard, Vanguard has ETFs and other traded funds, index funds on, the NASDAQ, for example, and they trade in, one of them might be the S&P 500. So it tracks the top 500 cryptocurrencies by market cap. And the top 500 stocks by market cap. And we would be doing very much the same thing for crypto by tracking the top 20 cryptocurrencies by market cap, and we would rebalance those holdings weekly. So all the trades are known in advance. There's no need to trust, a particular individual or human being. And the investment thesis here is that index funds have beaten actively managed funds since their inception. Actively managed funds, for example, on the NASDAQ, have hundreds of analysts, billions of dollars worth of assets, hundreds of times the data that the individual, retail investor has in the stock market, and they still can't beat the index. Meanwhile, in the crypto space, we've got very volatile assets. We've got very thin data, and very, very few professional traders. And if an index fund is going to beat an actively managed fund, on the NASDAQ, it will certainly beat the, with cryptocurrencies, because there just is no data to base any actively managed predictions on.
Right. So if you say you base it on market cap, basically, let's say CoinMarketCap, for an example. They have the top 20 market cap, and some of the tokens in there are also slightly, let's say, debated. Some people wonder whether these are Ponzi schemes or whether the token has any value at all. How do you guys approach that? Because if the computer is doing all the work, would they pick these tokens as well, or are you putting protections in place to make sure that that doesn't happen, that you don't accidentally invest into a Ponzi scheme, for example?
Yeah, so what we have in place is a whitelisting system. Essentially, pretty much every token gets whitelisted. We don't pass any moral judgment. We pass legal judgment, however, in that we obviously are not able, as a registered company, a fund in the Cayman Islands, we're unable to invest in illegal Ponzi schemes, etc. And as such, we will be excluding BitConnect and any similar type of scheme that comes up in the future. Once again, it's not a moral judgment. We're not saying gambling's bad, or coin based on cannabis is bad or something like that. We're saying we can't participate in something that is clearly illegal. And I don't think there's any debate around BitConnect is illegal or not.
Okay, totally makes sense. Thank you for that answer. So one question that came up in the community is whether you could please elaborate about forking, right? So blockchain forks were treated as anomalies, and any new coins created were seen as disparate from any other coin holdings for the purpose of these tests. That is coming from your own documentation or white paper. Mm-hmm. How do you intend to treat forks in the future? Is it same standard, like if they are on the top 20 market cap, we're just gonna treat them as a token that we're going to invest in because they are in the top 20?
Right. So in terms of that statement is referring to the historical back test. So I can give a bit of background around that. So we considered the Bitcoin Cash fork anomalous as any algorithm trading with the knowledge that the fork would occur would heavily weight towards Bitcoin, and that's not a fair generalization to expect moving forward. Forks are not predictable events, and they don't have predictable outcomes like SegWit 2x just showed us. So essentially, that was just referring to the back testing data. What we'll do with future forks is that, with any Bitcoin or whatever we hold that forks, we'll add it to the fund pool. And if it's in the top 20, it'll stay. And if it's not in the top 20, it'll be sold off at the next rebalancing period, just like anything else that comes into the fund.
All right. A fun question that came in for the community. I think it's a little bit of an inception. What would happen if Crypto20 were to enter the top 20 cryptocurrencies itself? Would you invest in yourself?
No, I mean, all of our statistics so far would point to some sort of implosion of the universe. Yeah, so essentially we wouldn't. No, we wouldn't hold our own tokens.
It's probably hard to get into that top 20 in the first place, because you would essentially funnel your funds through to those top 20 coins in the first place, right? So what efforts is Crypto20 taking to reduce the 1% withdrawal fee? Someone in the community noted that this is a huge fee compared to anything that I've seen in ETFs, crypto, and will exceed the typical $5 ETF trading fee. But like 1% can be quite a big number, especially if you have a lot of funds invested. How do you treat that? Like, do you have any intentions to reduce that fee?
In terms of just, there's a couple of issues there. I guess the first one would be economy of scale. If you have 100,000 users, you can charge $5 for your ETF fee, and you can break even on that. In the crypto market, everything is, less than 1,000th of anything that just even on the S&P 500. But Crypto20 tokens can be sold on exchange to other people. You never actually have to use the liquidation function and incur the fee. You can sell them to your friends, you can sell them on exchange, and never actually incur the fee. That's the benefit of having a tokenized fund. You don't ever have to wait. You don't ever have to, wait for a human to process your withdrawal or redemption. And that fee essentially just covers the selling and repurchasing of the 20 underlying assets whenever the tokens are sold. But it's a maximum estimate, so it'll likely be around half this. As you know, it's about 0.25% for any trades on exchange. And if we have to sell and repurchase, we just put in a bit of a margin there, so that people aren't surprised. But that is definitely a maximum.
Okay, clear answer. Thank you. For the person who asked that question on the community, feel free to ask further clarification if needed. Okay. So the next question from the community is, in the executive summary, you're saying that 98% of the ICO funds will go towards purchasing the underlying assets. This has been noted or has been conceived to be misleading, given that actually only 87% is going to ICO participants. So where is the rest of the money coming from, essentially? Can you comment on this discrepancy? Yeah,
so there's the user that asked the question is conflating two rather different issues there. 90% of the ICO funding is going directly towards purchasing the underlying assets. So that's a fact. It's not 87%. Taking 13% would mean that we reduce the assets under management of the fund by 13%, which means that there would be less funds to trade with and less potential return. The token allocation, however, is quite different. So the team allocation vests over 2 years to align our incentives with that of the investors. And the token allocation is visible alongside the ICO fund usage on all of our marketing material. It's including on the homepage and the white paper. Most ICOs keep 100% of the funding to build a product, but our product is already complete and was self-funded. So the 13% of tokens that go towards the team, marketing, etc., and for future usage in terms of legal considerations, etc., are largely in lieu of any team taking any salaries or anything like that. And in none of the initial investment that we've put several $100,000s of our own funds to build this product and be legally compliant. So yes, I don't think it's misleading. 98% of the ICO funding is going directly towards purchasing the underlying assets. We as a team are not taking any of the Bitcoin, Litecoin, or ETH off the table or for payment. That is going towards purchasing the underlying assets. We allocate ourselves a portion of tokens, which vest over 2 years, to align ourselves with investor interests. So only if C20 does well, investors do well, and we'll make, we'll be able to acquire those tokens.
Okay, thank you for that answer. So the next question is, for the Crypto20 ICO, C20 tokens will have the following pricing structure. The first 48 hours of the ICO is $1. The next 48 hours to 4 weeks of the ICO is $1.05, etc. But the question is, aren't the coins priced based on the underlying security or the underlying assets? How do you defend inflating the prices on these, inflating the ICO price on later buyers?
Mm-hmm. So to give a little bit of background, we haven't been giving any kind of insane discount. So a lot of the ICOs, they'll start off with a 50% discount, 100% bonus or something like that. Essentially what that amounts to is that whoever's putting the least amount of money for the tokens is where the sort of fund value will, the token value will land up on exchange. So, if a token was initially 1 cent and somebody gets in later or for more, the token will always settle around the 1 cent mark. For other types of ICOs, I'm talking about the ones where they keep 100% of the funding, and that kind of screws everyone else over in the future. But we're doing it fundamentally differently here. The tokens have a minimum price, the net asset value, but the upwards price appreciation is based on supply and demand. And yes, and the net asset value of the fund has increased. We're a fund, we're keeping these assets in crypto. We're using 98% of that actual crypto that comes in to rebalance into the top 20. And right now there's $1.12 of assets for every C20 token sold. It would be grossly unfair actually to keep the price at 95 cents as the underlying assets have appreciated. So if we were selling it at the NAV, for example, as an ETF or something, you're selling it based on the value of the underlying assets, then we should naturally increase the price as the sort of Bitcoin, Litecoin, Ethereum that we hold already has appreciated since investors invested initially at the 95-cent price.
I hope that was clear to everyone. If not, feel free to further ask the questions on the live stream. A lot of people are asking questions, and so I'm not out of questions for you yet. Let's stay with the ICO frame right now. The question that came through is, how does your ICO work? Do you have any smart contract which is distributing the tokens? And can I contribute in Bitcoin, Litecoin, Ethereum, etc.? Like, how does that work?
Right, so we take in funding from various addresses. Obviously, you can contribute in Bitcoin, Litecoin, and Ethereum right now. And we distribute the tokens once per day. And that's been going on every day since the beginning of the ICO.
Okay, so at the end of the day, you receive, oh yeah, because the ICO is already running. So at the end of the day, you receive tokens immediately.
Yeah, so we're not waiting, 3 weeks after the ICO to issue the tokens. Every day, whoever's invested once per day, we issue tokens.
Okay, makes sense. So what incentive is there actually to buy into the ICO for maybe more advanced traders or crypto investors, it being an index fund, because essentially they can also purchase the coins themselves. So what is their advantage there for participating in this particular ICO?
It's a full-time job for any individual, even if you're a brilliant trader, to rebalance a portfolio weekly would pretty much be a full-time job. It's also much more expensive as an individual. The compounding fees, if you're rebalancing weekly, for example, and you're rebalancing 20 assets, the fees an individual would pay in exchange, roughly 0.25%. But as a fund, you can get those, pretty close to zero sometimes if you've got really high volumes. So we can do it with economy of scale at a much cheaper price than an individual, and it's all automated. You don't have to spend 8 hours a day trading.
Okay, I mean, to me personally, I'm running Cryptominded, and that takes a lot of time. I barely have any time to trade on a daily basis. I mean, I do research because I come across tokens filling in them on Cryptominded. But yeah, I can totally see for many people that it would be hard to actually go and research and trade, etc.
Mm-hmm. So what this does is it gives you peace of mind. A lot of people, it takes the emotion out of investing and it enforces investment discipline. So a lot of people might panic sell or buy in a hype cycle because we are human and we're susceptible to emotion. But an index fund based on rules, isn't, and it enforces investment discipline and makes sure that we don't make sort of rash judgment calls based on hype or panic, and it lets you sleep soundly at night instead of checking coin market cap every 15 minutes to decide if you've got to put a profit stop loss on your ETH or Bitcoin or whatever.
Right, instead of one coin going down, maybe the rest is still going up, and then you don't panic because of one coin going down, because what you're looking at is the overall price of the index. Right. Right,
and it's out of your control. It's the bet that Crypto20 essentially is taking is that the entire cryptocurrency market cap will grow, as opposed to betting on a single technology, which is fundamentally more risky. We can bet quite safely, I think, that you could say that the cryptocurrency market cap will grow in the coming years, and that's essentially all an index fund needs to do. Because you're tracking the index, and the index will obviously follow the total crypto market.
All right. So one question that came through with regards to the GitHub repos. So Igor is saying, hey, thanks for doing a live session. Can you talk a little bit more about the Crypto20's GitHub repos? They seem to be practically empty. Is there a reason why we're not seeing more commits to the project?
Yeah, because those are the public repos. The private repos have hundreds of commits. It's obviously just not public. Just the way that projects work on GitHub. If you're not taking contributions from members of the public, but it's internal work that you've published on a public GitHub. Okay,
yeah. I mean, so personally, myself, I see two kind of projects in this space. Very clear open source projects that are intended to be maintained and run by the community. And then there is businesses which issue a token or funds that issue a token, but they are not necessarily open source projects, so don't necessarily always expose all their GitHub repos.
Yeah, so our external code in terms of the smart contract and the pricing, functionality and all of that, the smart contract code audit, and that's all on GitHub because that's public. It's not any of our. It is intellectual property of Crypto20, but it's not. Obviously, for transparency's sake, we need to share that code. Transparency and security. So it's not like we're not taking active, development contributions from members of the public, and that's why it's obviously fundamentally different to something like Ethereum or Bitcoin or something like that, where there's a lot of people out, submitting contributions. Obviously, all our repos are private.
All right, thank you. Oh, I thought I was muted. I was not. So here's some questions with regards to the team. Can you maybe first off tell us a little bit about the team's background, maybe the three most important people, and basically why you think you guys are suited to build an index fund in this space?
Okay. So I've started, several companies. I'm pretty experienced in the management of startups and growing businesses. I've worked in the cryptocurrency space before, and we have a lot of experience in developing machine learning algorithms for banks, insurance companies. One of our investors, institutional investors in Data Profit, owns several multinational insurance companies, and we've developed a lot of products for them. So I've got experience in the finance space, and I've got experience in using data science and machine learning to develop powerful algorithms and to automate products. In terms of our other team members, Bobby Yonkers, so he's had experience at Ernst & Young and at PwC as a fund manager. So he's also a chartered accountant, which is it's a pretty high level qualification. And Franz Cronier's got a master's in statistics and has worked obviously a lot in data science. A lot of our team has pretty significant experience in the space, and it's not something you need to be 45 to do, because Solidity and smart contract blockchain programming has only been around a year or so. So nobody can have 5-10 years experience. I don't think there's anything wrong with having a youngish team developing a product like this. But a lot of us do have experience in multinational corporations or management consulting, finance, and we know the best practices in industry. It's not like we're just all college students. We've had many years of work experience in the sort of as growing businesses or being part of a corporation.
Okay, so in terms of like the team, someone asked, he wanted to know a little bit more about the security, or the security of the funds rather. So what happens if a disgruntled team member maybe steals one of the wallets? What processes do you guys have in place so that team members can't put the project at risk?
Right, so we've got several processes in place. So firstly, all the cold storage wallets are kept in a secure facility that requires double signature to access. And the other signature is an independent third-party auditor. So no single team member can ever get in there alone to access the wallets.
Okay, sorry, I was reading the questions very quickly. I think that answers the question, but if in the community you think you want to know more, let me know. Then last few questions. Basically, the question that comes in is, how will, what other kinds of funds can we expect from the C20 team? Is C20 the only kind of token that you will issue as a team, or are there any plans for other funds as well? Maybe can you tell us a little bit about that? Like, what are the future plans of the Crypto20 team?
Right, so we're planning to be the vanguard of cryptocurrencies. So we will issue several new funds in the future, hopefully with the long-term goal of having something like an ETF, cryptocurrency ETF traded on the NASDAQ. You know, Crypto20 is a proof of concept and we'll build up a very strong track record. And after that, we will go through, you know, the arduous legal process of actually registering in the US as a security, etc., so that we can, you know, provide services and our products to retail investors as opposed to just accredited investors or, you know, institutions under a Reg D exemption.
Okay, thank you. So this is a question from me personally, but there are a few other platforms out there which also offer similar funds. For example, Economy offers a platform where you can essentially follow other people's funds. What was the decision to start your own fund and not essentially start a token on their platform? And how do you intend to compete with platforms like Economy?
It's an excellent question, and I'm glad you've asked that. The platforms can't compete with us. They've got to pay their token holders, they've got to pay their team members, and they've got to pay the fund managers. We've got to pay none of those groups of people because we go direct to the end user as a token. You know, the Economy funds have fees of something like 3% per annum, and ours is 0.5% per annum. So once the fund is going and operational, nobody, unless they issue a token themselves, will be able to compete with those fees. It's just inconceivable. You know, they've obviously raised an ICO with a promise of bringing in funding from future funds, but, you know, we've completely disintermediated them from that process. And I don't see why anybody would invest in an inferior fund that has no justification for their hyperparameters. And in terms of, you know, Economy in particular, I think they've shown themselves to be kind of irresponsible with user funds. They haven't been keeping them in cold storage. You know, they were susceptible to the first parity hack. Then they told all their users that, you know, they were keeping the funds elsewhere. And it just came out that, you know, I can't remember the exact figure, but something like a third, all of their ETH, 114,000 ETH was lost in this parity hack. And that will never be recovered unless there's an ETH hard fork, which I really doubt. I would put almost 0% possibility on that. So why would you trust the platform and people who don't, you know, have any care for your money or your life savings? I would, you know, steer pretty clear from them or any other kind of platform like that, because that's the kind of thing that you're susceptible to if you're, you know, letting another company manage your money in that way, you know, without being transparent about their processes.
Do you guys have any plans to store the funds at parity? Probably not after what's happened.
No, never. We can do multi-sig, you know, in real life, where you need to have the presence of two people to unlock a physical storage device. And that's much more secure than a smart contract or something like that, which, you know, the security for those smart contracts is already a nightmare. And with multi-sig wallets, maybe 10x that kind of nightmare. It's really a disaster. And it's not, you know, a road we prefer to traverse at this time.
Okay, thank you very much. That was pretty much all the questions I've got. I think your colleague has also been answering some of the questions in the live chat. If anyone still has remaining questions, this is your last chance to ask them. So if anything, please let us know right now. And afterwards, we will survey the community members on Cryptominded to get a better idea of like what you think of Crypto20, whether you would invest in it or not. What is your feedback for Daniel and the team? And we'll set up a report so we share it with all of you. If you have any questions about that, let me know, but you'll receive a direct message on the Slack community afterwards, so make sure to fill that out. So the last question that I received is, will you have a referral process once the ICO is completed? We would like to feature Crypto20 on our site and refer clients to it.
Refer clients, so we will not sell any tokens directly after the ICO. This is your only chance to get them. Otherwise, you will have to wait until it's on exchange. And when it's on exchange, you know, people may or may not be willing to sell their tokens, and you may or may not get the listed price. You know, it might be trading at a premium, you know, far and above, you know, what the net asset value price is. So to anybody in that kind of position, I would suggest to purchase now during the ICO to make sure that you can, you know, safely say that you'll be able to acquire the tokens.
Okay. One question that has been asked as well: how will investors be able to access the funds in case of any geographic or personal calamity with the founders? So in case, let's just hypothetically speaking, if you guys are on a bus and the bus got hit, like, how would potential investors be able to access their funds, if at all?
Okay, so it's a pretty grim scenario, but I suppose it's one that
Agreed.
Everybody needs to look at pretty thoroughly. But you know, we hold some ETH in the smart contract, and you can trustlessly withdraw on the website, on the withdrawal page once the fund is live, and that is not a human, you know, approval process. You just use the function that's built into the C20 token, and it will automatically liquidate the 20 underlying assets and pay you out in ETH. So that would, you know, be a way for you to get funds out. Alternatively, you know, you could just sell your token on exchange. The underlying assets will still be there. But, you know, we'll have processes in place, you know, that our third-party auditors can take over in case of any kind of mortal scenario like that.
Yeah, let's just hope that doesn't happen. That's it's very unlikely, but the question was asked, so I thought I'd ask you. Basically, the last question is, what processes are in place to prevent loss of value in the event of massive use of the liquidation function of that particular smart contract, which you just explained?
Mm-hmm. Sorry, could you repeat the question?
What processes are in place to prevent the loss of value of the C20 token in the event of massive use of the liquidation function of that smart contract? I don't think that actually changes the value of the underlying assets though, so that would probably not change the token value either.
Yeah, so in terms of people using the liquidation function, those tokens aren't burned or destroyed, so there's no net reduction in the fund value. Those tokens are resold on exchange for the market rate, and if it's sold at a premium, then that additional value goes into the fund.
Okay, makes sense. Very, very last question. Are you taken? Is someone asking?
No comment.
No comment. All right. Thank you very much, everyone, for watching. This was Daniel from Crypto20 and Dylan from Cryptominded. So in about 15 or so minutes, I'll trigger the survey to all of you on the Cryptominded community. It will basically ask you some questions, whether you would like to invest in Crypto20 or not. What is your feedback for the project? What are your positive remarks? What are your worries, or basically the questions that you're still lingering with? We'll then basically combine all this feedback that you have given and put together a report and share that on Slack and on the various Facebook groups that you guys came from on YouTube. For example, Bitcoin for Beginners. Thank you very much, Daniel. Is there anything that you'd like to say?
No, it's great. Thank you for the opportunity to answer these questions from the community, and you know, I'm happy to do it again if there's any requests. But yeah, thank you for the chance to speak.
All right, you'll receive the report from the community soon. And good luck with the ICO.
Great, thank you.
All right, thank you. Have a good day. Bye-bye, community.